I hope you are doing well. Steve here. Today I have a collaboration with a gentleman named Dan Frio. I'll be sure to link his YouTube channel below. But today we're going to talk about everything related to credit and how you guys can increase your credit score. Because honestly, the higher your credit score, the better interest rates that you're going to get for mortgages, for credit cards, for card debt. And ultimately, people with poor credit scores or even lower credit scores end up spending hundreds of thousands of dollars in interest over their lifetime than somebody with good credit. So let's jump in.
What we're going to talk about today is how important your credit score is. And a lot of people, they thrive on getting an 800 credit score, but they really don't know how do you get your true credit score? What's a good credit score? And how do you go about, finding out I'll call them credit hacks. So what's the most common thing that you normally hear when it comes to credit scores or that people just don't understand?
When I was full-time working with real estate clients, you would run into situations like you run into all the time where people they're not able to get financing or their interest rate is much higher. And then that could push them out of getting financing, and then the deal falls apart. And especially in today's market with rates rising, I think it's really important that people start to concentrate on increasing their credit score, especially in the future when I think there's going to be a lot less borrowers in the market, and financing might get tighter. I think it's important for people to learn, which is one of the reasons why I wanted to reach out to you and pick your brain on credit scores and how people can raise those up. And, we're going to put this on our YouTube channel as well, so we can help educate our audience as well, because I think I forget the analysis, maybe you have it, but if your credit score is lower, it's like thousands, if not hundreds of thousands of dollars that you pay more in interest, whether it's a car loan, home loan, or whatever, over your lifetime. And it's simple things that you guys could do to bring that credit score up and save a ton of money, have more money in your pocket to invest.
Here, the biggest piece of the puzzle that a lot of people get confused on, and that's why I created, I'm going to show you something. This was kind of wild because when you reached out to me saying, hey, can we talk about credit scores and so forth? My number one video still to this day is my credit score hacks. And this was years ago. It's probably the worst video I did. I was at home and I'm like, I just sitting there like this and so forth. And I have, for me, it's huge. It's like 300,000 views. And the intent was just to go out there and say, hey guys, talk about basically like, how do you find out your real credit? So the biggest thing that a lot of people don't know or don't understand is how many credit scores there are. So one of the first things is like everybody, we get in arguments with people. They're like, well, my credit score on this system shows I'm at a 740. Okay. And then we pull their credit and it's a 680. And they go bonkers. So then they're like, well, that can't be. So the first thing I want to explain to everybody is there are all kind of scores. But the one thing, the free credit score that you get from most places is called, it's what they call a Vantage score. And the best thing I can explain what that is it's just an educational tool. That credit score, no lender, no entity in the whole country uses it for anything. And like Steve was saying, the higher your credit score, the better your interest rate on a car, interest rate on a mortgage, lower your insurance, lower credit card rates, everything. And you can't just think of one segment. Well, it'll get me a lower mortgage rate, so I'll save $100, $200 a month. Well, it's also should be able to get you lower insurance scores. That's a whole nother video I would like to do, because I just changed my insurance from Allstate that I was at for 20 years. And I moved over to a broker buddy of mine, kept asking. I'm like, okay, give me a quote. It was $2,000 different. That's almost $200 a month. So if you're like, okay, my expenses are getting out of hand, I have even down in the description below my buddy's link, just link it and get a quote. I mean, it doesn't hurt you. But getting back to the credit score piece, what you want to do is you want to focus on your FICO score. Okay. And Steve, I'll throw this up here real quick so people just look at it, but the intention wasn't to promote this channel or this website. This is a website that I actually created several years ago, and I just updated it. It's called Credit Scores and More. And I'll just go through it real quick. And then Steve, we'll open up and I'll answer any questions, or you can fill me in with what you're hearing a lot about. So the first piece of the puzzle that you go to is right here, Credit Scores and More. I feel like this is an infomercial, and I promise you it wasn't. It was Steve's idea the context. And I'm like, dude, I got a website. So the free credit score is just that. You're going to go to Credit Karma or Credit Sesame, sign up. It's free. Don't buy any of the crap that they're trying to sell you. Just get your credit score. Use it as an educational tool. But the one piece of the puzzle that works is, what is your real credit score? And it's right here. It'll take you to My FICO, okay? And the My FICO basically is, let me get back to us, is the true credit score that lenders use. And your employer probably will pull your credit before they hire you. If you get absolutely terrible credit, you might not get a job. Okay, so it plays a bigger role than most people think. And I'll leave it at this, and then I'll throw over the mic back to you. The one main reason why I created the video that I did and this website was one particular area that people always kind of stub their toe on: paying off collections. Okay. Let me explain this real quick, and then I'm going to throw it over to Mike to bring in his input and then ask any questions that we got. Here's how collections work. And this is one big piece of the puzzle. Let's say you have a collection, it's from 5 years ago. Okay. And it doesn't matter if it's $1 or $50,000. The dollar figure doesn't matter at all. All the analytics within the credit report reads is it sees collection, last active date. Okay. So as the last active date keeps getting older and older and older, the impact to your credit score keeps diminishing. All right. So here's what happens. It's a bill from 5 years ago, 6 years ago, 7 years ago. It probably isn't really playing much of a role on your credit score anyways. So what some people think is like, hey, I just got a tax refund. I got this $3,000 collection account that I'd like to get rid of and help my credit scores. So they'll go in and they'll pay that collection. Well, all that happened was it just took the last active date, because remember, the dollar figure doesn't matter. So now the dollar figure goes to 0, but the last active date is going to read today. So basically how the algorithms read it is saying, well, you just got a collection today. Your scores are going to drop. So if your lender's requiring that you pay it off, don't pay it off prior to anything. Pay it off at the closing so it doesn't affect your credit scores. That's the biggest hack I can come up with, other than some other things. So did you know that part of it? Because that throws a lot of people for a loop.
Yeah, and I think I might even still be confused by it. So don't pay that off until you're ready to close.
Right. So if you have to pay it off, sometimes you don't have to. So again, it's based on the last active date that reads on your credit report. So let's say, again, I'm looking at that credit report, and that collection account is from 2001. It probably is playing no role. The last active date is 2001, let's say. It's probably playing no role in your credit score because it's way too old. So you go in today and pay it off. The only thing what's going to change is now it's going to say the last active date, instead of being 2001, is going to be May 13th, 2022. Boom. Your credit. Now it says, oh, you just got a collection account. It's going to read the collection. Again, the dollar figure doesn't matter. Doesn't matter. If it's $1 or 50,000, it's going to read the last active date. The last activity date is May 13th, 2022. Bam. Your credit score is going to go down.
Damn, I did not know that.
Yep. That's one of the biggest things that people get stuck with, because their lender, new loan officers or new whomever will go in and say, you know what, if you pay off that collection, your score is going to go up. No. And once you do it, there's nothing you can do. So that's one of the biggest things that helps people. And then on my website, I just added, there's 2 more features that we just added. You can add your rents now to your credit report. They're saying, and I just posted it probably within the last week or 2. They're saying that could give you potentially up to 40 points within 30 days, because if you rent from somebody, that company probably 99% chance they're not rating that on the credit report. Well, if you've never missed a payment on that, it can help you in a big way. So that's another tool that's out there.
So if you're renting from, say, just a mom and pop small landlord, how can you get verification of those rents? Does it have to come from them, or can you show bank statements, or what can you show?
They'll dig into it. They'll ask you for proof on your end, proof on the other end. So they're not just going to willy-nilly throw it on there. You have to show proof. So the best way is you can go into your bank account and just scan your bank account if you pay it that way. If you pay cash, that's a toughie. Unless it's an entity, meaning it's an LLC or an apartment building or something like that. But you can't just go to your buddy and say, hey, I need a verification of rents. It has to show perfect so I can boost up my credit score. That won't work, but you have to validate it somehow, some way. A lot of people use Zelle or whatever, PayPal or whatever, and pay it via that. You can give them those records. You have to document it, but it will get added to your report. And if you've never missed a payment, it can only help you. So that's another piece of the tool. The website, I kind of try to keep updated all the time. It's a little side thing that I just have people go there and say, here's this. Another one, and then I'll answer any questions you got. People say, if you pull my credit, my score's going to drop. Probably. But there's two areas that I want to discuss on this. One, it's what's called a soft pull versus a hard pull. Okay. What a hard pull is that a lender or somebody's checking on your credit for a reason. Okay. That's a hard pull, and it will affect your credit scores. Okay. What increments or how many points, nobody really knows. But there's also a soft pull. That means if you pull your credit, there's no hit to the scores. So on the website, if you actually I'll go back there. And again, I apologize. I wasn't trying to promote this thing. If you go right here and click your true credit score, it's going to take you to my FICO right here. If you pull your own credit, there's no hit to the score. It's called a soft pull credit report. Okay. So you can, in that credit report, scores will probably be identical to the ones I pull. And because you're pulling it and there's no hit to the credit. That makes sense?
Yeah, for sure. Do you recommend somebody pulling their own and then?
I would. What do you have to lose? I mean, truly, it costs you, if you use that link, I think that you save 20% or something like that. You might spend $20 on one report. So there's TransUnion, Equifax, and Experian. There's 3 reports. Right. Believe it or not, and I'll keep diving down this entity. For example, TransUnion. Everybody's probably heard of TransUnion. TransUnion has, the last I looked, I think there's 3 or 4 different models that they have. But the last time I looked, it was 3. Let's say the models we're just going to use A, B, and C. Okay, so TransUnion has models A, B, and C. All right. Under each one of these models, there's subsections. And this is where it gets confusing. So under model A, you're going to have subsections. Okay. And I'm getting to something, I promise you. You're going to have a score. What I mean by that is you're going to have, under TransUnion A, you're going to have 4 different scores. Those scores is a mortgage score, an insurance score, credit card score, and I just went blank. Mortgage score. If I said that. Mortgage, car, insurance, and what am I missing? Credit cards. So again, TransUnion has 3 models. Each model has 4 subsections. So TransUnion alone has at least 12 different credit scores. People don't know that either. They're like, my TransUnion score is a 680. Well, which one is it? Model A, mortgage, model B, car? We don't know. So if you pull your FICO score via that system, it gives you everything. And that's where people get confused. They're like, hey, there's 100 numbers on here. I don't know what's what. Well, I'll go and say, well, we use model B, mortgage score. What is that? And they'll scan it and they're like, oh, it's a 783. Sweet. Now I know what most likely I'm going to get.
Gotcha. So let's back up a little bit for a second on the older, anything negative against your credit that you're talking about on older stuff. How old does it have to be? Like, let's say it's something that maybe 18 months ago. Is that new enough for you to tackle that, get it paid off, or negotiate that?
I wouldn't do anything. I wouldn't do anything on any collections.
Nothing.
Nothing.
No matter how new or old.
Right. Unless you have to. Okay. Let's say they're going to garnish your wages. Well, you got to pay it. Or something else. But if your lender says, hey, you got to pay that off now, don't pay it off. Please don't pay it off. Because if something happens or they have to re-pull your credit, I can almost assure you it's going to drop. So what happens is, let's say the collection hits 6 months ago. It's still very, very, very active. Once it gets over a year, 18 months, 24, as the time extends, it's having a less of an impact on your credit score. So again, if it's 3, 4, 5, 6 years old, it probably isn't even, it might affect your credit score a point. So, but if you pay it off, it could affect you 30, 40, 50 points to the down. So you might be shooting yourself in the foot.
So right now, and I've had this forever, I've had LifeLock, and I think they're owned by Norton now, but basically it's all comprehensive, including credit, monitors your credit, identity theft, all that kind of stuff. It's pretty good. I mean, it does its job. I mean, it might be a little delayed when I do a large purchase or something like that. It's a little delayed. What's your take on a company like that or other like kind companies?
I have no problems with any of them. What you just have to do is you get what you pay for too. So, you have these huge reputable companies. I would probably go with them because here's the downfall of a lot of like collectors. Okay, let's kind of go down that. The debt management companies or the credit repair companies and all that. I've done this. I've been in this business for 33 years. So I've kissed a lot of those frogs. I hate to say it, 90% of them are just BS. They'll charge you $3,000 and they'll send out, letters to all the creditors, and then they'll start working on it. By the time you spent all that money and everything else, you probably could have cleared up your credit on your own. Yeah. And then the tools that we have as well. But I have systems like that as well. I sign up for all this free stuff too, like Credit Karma, Credit Sesame, things like that. It's free, and they'll blip me back like LifeLock does. As soon as I'm doing a purchase, it'll be bloop, your credit score is just pulled. Sweet. So now I know. But some of these systems, it is worth the 10, 15, 20 bucks a month to really secure things. The one thing I would advise you guys is a lot of times when you apply for a loan, some of these companies will freeze your credit. So you apply for a loan, we get this, that happens a lot. They'll apply online, we'll go through, we'll start working on the file, we'll hit the credit report, credit comes up blank. Everything's frozen. So just so you know, when you go out there and you're looking for a car or a house or credit cards or whatever, unlock your credit before you do that, because the lender or whomever's pulling your credit, they're going to hit a complete brick wall and they won't be able to do anything until you unlock your credit reports. And I think in LifeLock, can you just go in there and basically a click of a button to unlock them or whatever?
Exactly. That's exactly how I have it set up. I have all of mine frozen. All right. So I think the last thing that I want to address with you is, let's say I'm looking at just cleaning up my credit. I have no intention of getting a home loan anytime in the near future, maybe 12, 24 months down the road. What could someone do right now if their credit score is, high fives, low sixes? They want to get that up. They want to get prepared. They want to get a home in the future or future investment properties if the market does crash, which I anticipate it will. What are your suggestions? Like maybe top 3 tips that they could do, like right now on their own without spending any money. What could somebody do? And I gotta combat a little bit against the non-spending money, and it might be 20 bucks. Okay. So what you have to do is we got to get a benchmark. Where are we starting from? Because like you said, they have a 560, a 580. They want to get it up. But where did that 580 credit score come from? Is it a Vantage score, which is irrelevant anyways? Or is it your true FICO score? And we'll reference Vantage and FICO. Okay. So what I would suggest you do is you can go to my website even if you want to. It's called Credit Scores and More. And again, the whole video wasn't prompted for me to promote that channel, but you can just Google it if you want to. You want to go to My FICO. Okay. And then you have a link through my system. It gives you 20% off. And so pull your credit. You can just use one of them. Say, for example, pull your TransUnion score, but pull them all. Okay. So remember what I said, there's the 3 roots and all this other stuff. Yep. Now you have at least a benchmark. Okay. A true benchmark. Now let's see where we are. Okay. A lot of these systems have what ifs. So you can go in there and actually go, okay, I got a Discover card for $10,000.
I used it too much. I know we just went to Hawaii, or whatever. But if I paid that down, what would that do to my scores? That's the what ifs. So, but again, we start with a benchmark. Then what you want to do is the best thing I could say is review it for accuracy, because most of the time it's completely inaccurate. Okay. But let's say it's accurate. All right. So now what do you do? Well, now let's look at, are there some accounts that we can tackle? So the biggest thing you want to look at is your utilization rate. So what you're going to do is on the credit report, you're going to look at what your high credit is. So let's say, for example, I'll keep going down that avenue with the Discover card. Let's say your Discover card has a 10,000 max credit and you owe 10,000. Well, your credit score is going to stink. It'll suck. It really will. So what you'll do is in that system, or we can even assist you with it, we play with it and say, okay, if we paid it down $1,000, $2,000, or $3,000, or whatever, what can that do for us? But let's say we don't want to spend any money. Well, another piece of the puzzle where you can work with is asking like we just said with the rent piece of the puzzle, possibly put your rents on your credit report. One big thing that helps very quickly is becoming an authorized user on an account. Be careful. Okay, be careful. You know what I mean by authorized user, right? You go to mom or dad or whomever and say, hey, I know you had a Visa card for 20 years. Have you ever missed a payment? And it's got to be somebody you really are tight with. Say, mom, yep, we have the Visa card. I put $100 on there each month, but we pay it off. Heck, we've had that since the 80s. Hey, can you add me to your card as an authorized user? Hold on, mom. I know I'm irresponsible, but don't even give me a card. Just put me on your account as an authorized user. When we get the card, we're going to tear it up, shred it, bury it in the ground in the backyard so I can never get access to it. But what that's going to do is now that's going to show on your credit report that whole history. And it might even go back before you were even born because mom had a credit card, at that time. But it now shows on your credit report and you're going to get a nice little boost on your credit. So those are just a few simple ways to do that. But I would please caution everybody, watch these, try to stay cautious of a lot of the YouTube hack videos because a lot of them are just bad. And again, that's why I created my first YouTube years ago in regards to credit scores, because, that was happening to me. I'd get a client, they just went to XYZ bank, got turned down, and then I pulled their credit. And I'm like, your credit scores are terrible. Well, yeah, they made me pay off, 5 collection accounts. Oh, but you can't go back now. You can't say, go back to those collectors and say, hey, I want the money back, put the collection back on there. It doesn't work that way.
Now, if somebody's not getting a loan like we talked about, and let's say they do have some judgments against them and they do have some money to, my recommendation, because me personally, way back when I had to settle a couple of credit cards and you can do it all on your own and you can settle many times for pennies on the dollar. Mm-hmm. And then, I had a couple of inaccuracies on my credit report as well, where I had to just get this simple form, send it to the different credit bureaus, and it got off my credit report. And shortly after, my credit jumped up tremendously. And, ever since I've been in the 800s. So, any additional advice on that for people with existing judgments, like, and inaccuracies on the report?
So let's break down. There's different pieces of the delinquency factors. Okay, there's a collection, a charge off, and a judgment. Okay, it basically is you go late on a card or something, then you go to collection, then you go to either a charge off or a judgment. Okay, so they're completely different pieces of the puzzle. So the collection accounts is where those are the ones to avoid. Okay, but you don't want to get it to the collection part or the charge-off part or the judgment part, because that's not good. So the collection part, don't do anything with. All right, the charge-offs, don't do anything with, because what happened with those, the company charged it off. Okay, so let's go back to the Discover card. Discover tried to collect. So now they can't collect it. So they either have to charge it off or sell your delinquency to a collection company. That's what normally happens. Okay. So I'm losing my train of thought here a second. So that once it's charged off, though, they can't legally collect it from you because the entity already charged it off. They wrote it off on their taxes. And so now they can't write it off on their taxes and get a tax benefit. and then collect from you. That's double dipping. So they can't do that. So don't worry about the charge-offs, because don't pay them off, because the company already charged it off and you're just throwing that money away.
Is the charge-off not negatively affecting your credit still?
Yeah, it is, but it's done. Again, what happened was, let's say we'll go back to Discover. Discover tried to collect. They couldn't collect. Maybe then they sent you to a collection company, and the collection company tried to collect, and they're finally like, we're just charging this thing off. So you're stuck. You can't even pay it off because it's charged off. They legally can't. They'll probably take the money, but they're not allowed to. Okay. But then once it goes to judgment, now you got problems. Okay. Yeah. So it's going to show up on public records. It's going to show up on your credit report as a judgment and so forth. Those are the ones you want to get settled, because they can now go and garnish your wages, put liens on stuff and all kind of other things. But the charge-offs or the collections halt. Charge-offs don't pay. Judgments actively work those, because those could be really, really, really bad.
Yeah, and I've known other people with that actually out of nowhere old debt became a judgment, and they were going after wages. So, and they can legally do that, which sucks. One thing that you touched on, and I just want to confirm as well, credit even outside of getting financing is so vital. Good credit. And like Dan was saying, in terms of an employer, I knew somebody that had an accounting background, and they were going to get a six-figure position, and they had some minor bullshit on their credit report. And because of that, they're well qualified for the position and everything else. Because of that, they're like, this is an accounting position for our firm, and you're just, you're kind of irresponsible with this and this. And their credit report wasn't that bad, but they didn't like, high sixes or whatever it was because of it. And that ultimately cost a really solid position. So I think that's a good point that you brought up.
Well, a lot of people think, the credit score, it's just a bunch of bullshit. It's not, and I can't strive it. The best advice I can just give is be proactive and not reactive. Yeah. Because if you want to get that job, you want to get that car, you want to get that credit card, you want to maybe I would strongly suggest, if you're watching this video, call your insurance company or click the link down below to get another quote on your insurance. That industry is just nuts. And again, I'm personally, I was trying to show my invoices online to say, here's what my insurance was previously, here's what it is now, and my credit scores. I work on my credit scores all the time. As those go up, my premiums should go down as well. But
and I think you just brought up another really good point that I want to touch on. I think so many people they just ignore things in their life. And it's so rewarding when you can tackle things head on and knock it out and not be fearful of it and have this monkey on your shoulder, and it's there, it's stressing you out. It's not good for you. And a lot of people don't understand is they can make simple steps, even weekly, to tackle things like this. And when you do and you tackle it and you have a game plan, it becomes so rewarding. And then it's a trickle effect in your life. And before you know it, everything in your life gets better. And it's amazing. Like, so when the market crashed the last time, we did literally hundreds and hundreds of short sales. We helped a lot of people avoid foreclosure. And in that process, we were helping these people not only avoid foreclosure and doing short sales, but those same clients that we helped out, that we had them come back to our office and we talked about their credit and everything else, because ultimately they didn't want to rent for the rest of their lives. They literally wanted to buy another house in another 2 years or whatever it was. And I saw the pain in people's faces, and then I saw the gratitude and the happiness once they had a plan. And, if I got to get a message across to anybody watching this, is just have a plan and take little bites out of it. And before you know it, your life will change.
Yeah. And a lot of these free systems like Credit Karma, Credit Sesame, they're free. Okay. They're free. That's the first thing I can say, but they're good systems. I probably get a blip every couple of days saying, hey, Dan, you just paid off, that credit card. Your scores just went up. Congratulations. Or, you just charged on something and your credit scores might have went down a little bit. At least I know. I know what's going on and I'm getting the alerts. And again, some of these free systems, they're great systems. They use the Vantage system, scoring system. But again, use that as a tool. If you go into the system now and your Vantage score is 500, well, try to get to 600. So and because it will correlate over to your FICO score. But what I'm saying is, when Steve asked, what's the biggest criteria, how do you really start to tackle this, is to find out the benchmark. Where are you today, really, truly, and then start to work on it. And a lot of these systems, the website I have, it has some systems on there. Google whatever you need to Google. There's a ton of stuff out there. Just don't spend a lot of money on it. That's the biggest piece of the puzzle I can say.